And we've got a couple of other things to cover here, but then hopefully we've got some time as well to go through some homework problems if you have any. So we're going to talk about how Iowa does their income tax withholding. It's fairly similar, and I put the instructions up here to how the federal government does it. Actually, it's very similar to how we used to do it. The method that we're going to talk about, the pre-2020 withholding method, that Iowa method is pretty similar to that. So we're going to talk about Iowa, and then we're also going to talk about this pre-2020 these pre-2020 withholding methods, which is in the appendix to your chapter. Similar in some ways, but there are a couple of little differences to how we've been doing things. And then hopefully, like I said, we've got some time for some homework questions, and then we'll get you out of here so you can all go trick-or-treating. Oh, you already had your trick-or-treating. Sorry, I'm up in Ames, so we have our trick-or-treating tonight, and it's a little too cold as far as I'm concerned, but okay. Any questions before we get started here? So there's no, obviously the Iowa information is, you're not going to find it in your book. Everything about Iowa you're going to find here through these links. So we'll pull them up. Actually, I want to pull all of them up at the same time. All right, so we've got, Iowa has a couple of different methods. There's a tax table, and then there's also the calculation, kind of like what we did with at the federal level, where we've got to find the the bracket within which our income falls, and then apply, you know, the certain percentages and all of that. So we'll go first and take a look at the tax tables. Now the tables, let's see here, I put them up. Okay, there's the table. So you can see here, and we want to go to 2022. Oh, that's where I was to begin with. All right. So the tables are varied here on the website between the pay frequencies. Let's just pull up bi-weekly so you can see kind of what they look like. So it looks very similar to how what we did. And I know that's very tiny. I don't expect you to pick numbers out on that. Very similar to the Iowa tables. We've got a wage range over here. Now we've got this concept of withholding allowances, and you'll see this, we'll talk about it when we talk about the pre-2020 federal withholding method as well. Iowa still uses these allowances. They correspond to allowances on the Iowa W-4, and that's actually something I didn't put up here. So let's pull it up. Oops. 2022. Yeah, I guess it's 2023. So this is what the Iowa W-4 looks like. They still call it a W-4, but this is what employees filled out when they start work at an employer, or when something changes that would require them to change the answers on this W-4 form. So you can see there's, as far as filing status goes, there's only two choices, single or married, whereas with the current W-4 form at the federal level, we've got those 5 different filing statuses that we could use. We just have 2 choices here. You're either single or you're married. Single could also include somebody who's married, but they are legally separated. So there would have to be some sort of legal document to go along with that. And then we've got just another worksheet like we had with the federal W-4. Except, like I said, this whole concept of personal allowances is listed here. Now, personal allowances. There are instructions on the back to calculate personal allowances. Essentially, the higher the number of allowances, the lower the withholding is going to be. It means you're going to qualify for additional deductions on that Iowa tax return. So, for example, oh, and there's also this concept of exempt here for Iowa as well, just like we talked about with at the federal level. If somebody is not going to be subject to Iowa income tax withholding, I think they're not going to be, they can claim exempt. And then there are some guidelines here for how to claim that and whether or not the individual actually does qualify for it. Down here, we get into our personal allowances and the calculation of those personal allowances. Let me see if I can make this a little bit bigger here. There we go. So you can claim the following personal allowances. 1, for yourself, or 2, if you are unmarried and eligible to claim head of household status. So there's 2 allowances. Remember, the higher the allowance, there's an inverse relationship between allowances and withholding. So the higher the allowances, the lower the withholding is going to be. If you're married and your spouse either does not work or is not claiming allowances, you can claim 1 allowance for your spouse and an additional 1 if you're over 65. That means that individuals over the age of 65 are getting some sort of beneficial tax treatment on their Iowa income tax form. If you're single or hold more than 1 job, you may not claim the same allowances with more than 1 employer at the same time. So if you claim 1 allowance with 1 employer, you can't claim 1 allowance with the other employer. If you're married, both you and your spouse are employed, you may not both claim the same allowances with both of your employers at the same time. To have the highest amount of tax withheld, claim 0 allowances. And a lot of people will do that. They just won't even bother to go through the worksheet, just claim 0. Just like with at the federal level, you can have additional amounts withheld, you just can't be under withheld, right? Itemized deductions. Now, at the federal level, not very many people itemize their deductions. And yeah, again, you'll learn this when you get to income tax accounting, but there's always a choice between a standard deduction and itemizing deductions. And you get to take whichever is larger. For most people, the standard deduction is larger. However, in Iowa, that is not the case. In Iowa, the standard deduction is actually quite small, and many, many more people do actually qualify to itemize their deductions. So more people would probably be filling this part out at the Iowa level than they might be at the federal level in doing that itemized deduction worksheet that we looked at. Total amount of estimated itemized deductions. So if you think your itemized deductions are going to be $10,000, and you do have to have some sort of idea of what they're going to be. Enter the amount of your standard deduction using this information. If you're single or married filing separate, enter $13,850. Married, anyway, these numbers here. Subtract line B from line A and enter either 0 or the actual number, whichever is greater. Any additional allowances, divide the amount on line C by 600. And again, I don't expect you to know this in as much detail as the federal rules. Okay, this is just sort of an overview of how this works. So I know I'm zooming through this a bit. Don't panic about that. You're not going to have to know all of the details of this. Divide the amount on line C by 600, round to the nearest whole number, enter it on line 3. So actually, this is 2023. There may be a change with the itemized deductions because that number seems quite high. This was revised the end of 2022. Just curious here. Hold on. I want to see if that has changed. So, let's say 2020. Let's see if they have an older one up here somewhere. Sometimes it's hard to find past years. Look at this. W4 forms. So it has changed quite significantly. This means that the Iowa standard deductions have changed, have increased. So what I just said about more people itemizing their deductions may not be the case anymore. You can see here, when we looked at the other worksheet, so this one is for, this is 2011, but it didn't change a whole lot until recently. You can see here that the amount of your standard deduction, if single, use this amount, this $13,850, unmarried head of household, $20,800, married filing jointly, $27,700. It was, before that, where'd I go? I know this is kind of hard to read, but the amounts were $1,830, $4,500. So, and there wasn't even a married, I think there's a head of household one now. Yeah, unmarried head of household. So that indicates some major changes in the standard deduction for Iowa. But at any rate, so this worksheet at the back gets filled out in order to calculate the number of allowances. And all of these are different types of credits and deductions that would increase the number of allowances for those Iowa taxpayers. So we've got itemized deductions up there. The number of people on the return is another one. Allowances for child and dependent care credit, if the individual anticipates that they're going to be able to use the dependent care credit or the child credit for Iowa, then they would get some additional allowances. So as you can see as well, that this kind of exemplifies the concept here between the increasing allowances and the lower, the lesser the amount of withholding. So the lower income brackets here between 0 and 19,999, they would be able to add 5 allowances to their calculation of total allowances. As the income goes up, that number goes down, so the lesser the amount of withholding there would be. Any additional amount of withholding, again, same as for the federal government, you can claim an additional amount. So all of that here is listed here. So your personal allowances, which comes from that worksheet on the back of the page, allowance for dependents as well, that's going to come from. So one allowance for each dependent that you claim on your Iowa tax return. That would not be a spouse, that would be any children or anybody else who qualifies as a dependent on the tax return. So if it was a married couple with, let's say, two children, you get 2 personal allowances. Well, actually, probably only one if the other spouse is working. If they're not working, 2 allowances there. Allowances for dependents, they would get 2 allowances for each of those children. If they had an allowance for the itemized deductions after they did those calculations, those would be added on line 3. Any adjustments to income. So again, if there is, let's see, payments, penalty on early withdrawal. So these are all items that would be deductions. They would lower the individual's taxable income, any contributions to IRAs, penalties for withdrawal of savings, student loan interest. These are all different types of adjustments to income that are on a federal return. Again, those would lower taxable income, and so therefore you may be able to increase the number of allowances to then decrease the amount of withholding. That child and dependent care credit was on the other page, the worksheet. Total allowances, you're going to add all of those up. Then if you want any additional amount withheld, you would enter it here on line 7, and that would work just like at the federal level, where the calculation would be done, and then at the very end we're going to add some more to the mix. So this W-4 again is what is filled out by employees. Now, just to kind of mention, so at the Iowa level, remember we talked early on about the fact that employers are required to report new hires to the state in order to enforce child support obligations. This form at the end, as part of the W-4, employees also fill out this centralized employee registry reporting form. This is the form that's used in Iowa for reporting a new hire. And it is included as part of that W-4. So employer information at the top, employee information as well. Let's see if there's anything else that I want to. Is dependent health care coverage available? They want to know that because if the child is on is on Medicaid, if it's possible that one of the parents would qualify for health care, then they would want to make sure that that child is actually part of that health care plan with the employer rather than receiving the Medicaid benefits. So anyway, this is, again, this is that new hire reporting. It's part of the Iowa W-4. All right, so allowances. So we'll just kind of go through that. Now these instructions can be a little bit tricky, and you'll see why. We've got some what am I trying to say here? So we've got some calculations that we have to do, and they're using coded words or coded letters to indicate certain amounts, and they've got the definitions here. So step one, gross taxable wages are G. W is the federal withholding amount for the pay period. So you get a deduction for the amount of federal taxes that are withheld. That's because on the Iowa tax return, you get a deduction for any federal income taxes that have been paid during the year. So, for example, let's just say we've got somebody who is, let's say they're single, and their gross, taxable wages, we'll call it taxable, are $2,000, and let's see, they're paid bi-weekly. Anything else I need? Oh, and they had federal withholding of, let's say, $200. Let's see if that's enough information to do this calculation. So step one, gross wages minus the amount of federal withholding for the pay period. So this is T1. So step one. Equals 2,000 minus 200. So T1 equals 1,800. All right, step two. Standard deduction for the pay period. We're going to subtract the standard deduction from T1. Standard deduction amounts are listed below. So, and this is going to be T1 minus S. So now we're step two. So we're going to take T1, 1,800, minus, they're paid bi-weekly. Total number of withholding allowances claimed on the Iowa W-4. Let's say we had 3. So 3 times 2 or more, oh actually we're not multiplying that, it's just a flat amount. So standard deduction amounts, we're going to subtract 209.62. So T2 $1,590.38. Again, I found that the pay period, and then looking at the number of allowances, if we had 0 or 1, we would subtract 85. If we had 2 or more, we're subtracting the 209.62. Step 3. T3 equals T2 minus R. So T2 1590 38 times our tax rate. Now there is, it says for tax year 2021. Chart 1. Is chart 1 here? Yeah. These look familiar? So semi-monthly, daily, weekly, monthly, bi-weekly. If the T2 amount is, so 1590.38 over 1340, but not over 2011-15, so 60/20 plus 6.25%. Let's see here. Fully tax rates by brackets. Oh, this it says 2020. This is weird because it says 2022 on these, but it says 2021 up here. Unless they just didn't change that. So, let's see here. Where'd I go? 6.25% is our rate. $99.40. Step 4, let's see, T2 times, so 99.40 times equals T3 minus the deduction amount per allowance for the pay period. These are the deduction amounts per allowance for the pay period down here. So for a bi-weekly pay, $1.54 times 3. So we're going to take T3 minus 154 times 3. $462, $94.78. And then any additional amount, T5, this would be additional withholding requested. Although they've got the calculation here for you as well. So 6.25, 60/20 plus 6.25% of the amount over. All right. Oh, I'm sorry. I just looked at the rate. That's kind of strange wording there. Times the withholding tax rates. Anyway, so it's very, very similar to what we did before. I want to see if this comes out to be the rate. So 60/40, 1340. 8 minus 1560 plus 60, 20, 75 6580. Okay, so my T3 I think is off because I think I'm not supposed to be just multiplying that by 6.25. I'm looking at the instructions here, and it's, when I read it, multiply T2, taxable income, by the appropriate tax rates shown in chart 1, withholding tax rates, in brackets, by pay period, for, it says tax year 2021 on the next page. It's actually 2022. I don't think we're supposed to actually multiply it by the tax rates. I think we're supposed to do this calculation. So how it's worded up there is kind of funny. So I think this should be done just like we did the federal ones, where we take so that 60/20, we set that aside, subtract the 1590.38 minus minus 1340.77. So 1590.38 minus 1340.77. And in case you're wondering where I am, I'm right here doing this calculation. 249.61 times 0.0625, $15.60 plus that's $60.20. I think this actually should be 75.80. I don't think that's supposed to be like that. 75.80. Minus that 154 times 3 minus 71.18. All right. So very similar to that federal method. Now here are the tables. This is for 2022. Again, same concept. So here we've got biweekly tables. Number of allowances, 3. Let's see if we're close here. So this is, wages are 2,000. Let's see if it goes up to 2,000. Yep. With 3, it says 0, 1, 2, 3. Maybe 77.64. Oh, no. Right column. Biweekly. This one comes up with 77.64 as the calculation. I don't know if that's because, I don't know if there's a difference, like I said, this one, this is beginning January 1st, 2022. But then it's got this here. Okay. Let's see if, oh, I bet it's we have to subtract that, so 1,800. Okay, so I'm not quite sure how, let's see, 71.18. All right, so find the correct pay period table. Is anybody else trying to follow along with me and do it too? I'm trying to figure out where the difference is. Correct pay period table. Yeah, got that. Total allowances on the Iowa claimed by the employee. We have 3. Like the appropriate wage bracket in the left-hand column. Number of withholding allowances in the table are rounded to the nearest cent. All right, pay period none. Well, didn't work out. So they've got some examples here. So how did they do this? Okay, so T1, let's look at this. Biweekly wages of $2,100, 3 withholding allowances. No, okay, so that's very close to what we have here. So they've got 2,100 minus 117.39. So their federal income tax withholding was 117.39. Get 1982.61. Then T2, which we had here, 1982.61. They're using the same biweekly and the number of allowances, so minus the 209.62 there to get 1772.99. Then they're going to use the T3, so they are using the, okay, this is different from, okay, so I don't know if you noticed, so this should be the same as the table that I guess it is the same, the table that we chose. So 1340.77, but not over 201, 2011-15, so $60.20 plus 6.25% of the amount, that amount over 1340.77, so we did that right. That was where we calculated this 75.80, unless I did that wrong somewhere with the calculation.
Because I got 75.83.
You got 75.83?
Yeah, I don't think that would.
So if we had, let's see, if that was 1590.38 minus,
I did the.
minus 1340.77, 249.61 times 0.0625, $15.60 plus 60.20, 75.80. So I get 75.80
Yeah,
there.
you were right on that.
Okay. Okay, so that's the same calculation that they did here. They get 87.21. The difference between ours and theirs is the amount of federal withholding. We just calculated it as at a flat, or we assumed it was a flat $200. They've got 117.39 here. Then we get the 87.21 minus 154 times 3. Minus the 154 times 3. No additional amount withheld. 82.59. So we did the calculation right. 1590. I don't know why it's not the same as what's on the table. Unless that table is the wrong year. Or it's a different year. So this is effective January 1st, bi-weekly. This is 2022. It should be this column. They get 77.64. We have 71.18. I can't tell you what the difference is.
Are we supposed to be using the brackets from 2021? Because it mentioned it for step
I know. Let's see what 2021 tables say, shall we? calculate what it does for, here's 2022, bi-weekly, gross taxable wages, federal withholding amount, 200, 3, 0. Did it calculate anything? Oh, 7118. Can you see it? I don't know what's up with that table. But bi-weekly. I don't know. I don't know what to tell you. I don't know why this table. There's 7118 isn't even an option on here anywhere. Let's see what it would be though for 2023, just for fun. Because maybe that's what the problem is. Bi-weekly, 2,000, 200, 3. Oops. Did I do bi-weekly? Bi-weekly, 2,000, 200, 3, 0, 39.75. You can see how the tax rates have gone down significantly. The withholding in 2023 much lower than it was in 2022. I said I don't know that table. I can't tell you why. That's not coming up the same, but obviously their calculation is the same as ours. Okay. All right. Questions about how Iowa does these things? So it will get easier once we get to a flat tax in the state, obviously. I don't know, like I said, because we're in the midst of a lot of income tax changes in Iowa, like that standard deduction is a lot different, as we can tell, between what it used to be, and the withholding is certainly a lot lower as well. Trying to figure out why that table's not the same. It should be roughly the same. Actually, it should be exactly the well, maybe not exactly the same because there's a range of $20 there, but it should be close to the same. All right. Any questions? All right. You're welcome to go in and play around with those things. Let's move on to, I'm gonna actually stop and start this again.